After multiple years of providing content for all of you lovely viewers, I've spent countless hours reviewing charts and analyzing data to provide you with a solid foundation for your Bitcoin investing. So today I'm going to cover exactly how I manage my own BTC investments. Today we're going to be going over my unique strategy for my BTC investing. And before I go too much into this is the video I was slightly hesitant on because as much as I do enjoy providing some content and maybe some strategy ideas for you guys, I think a lot of investing has to be learned rather than taught. So I think it's good to come up with your own unique systems and approach to the markets, your own personal thesis, because it can be a very personal thing. However, in saying that, I thought it might be helpful to give you just a little bit of insight into exactly how I rationally look at the market to make more data-driven, unbiased decisions. So firstly, I've made this graphic. I'll just hide myself so it's a bit easier to see. Now, these are the Bitcoin trajectory catalysts, or BTCs for short. And this is something we've discussed on the channel before, but now I've expanded upon it and can give a little bit more insight into exactly how I view each one of these individual pillars that influence Bitcoin's price appreciation or depreciation. So this is macroeconomic data being the fundamental foundational support for bullish or bearish periods of price action for BTC, followed by BTC's own individual fundamentals, and then on-chain data and technicals. Now, I have included some percentages in these pillars to kind of give a rough estimate of how much influence I think each of these have. So for example, macroeconomic data having around a 40% influence on the potential price appreciation potential of BTC. And then also keep in mind, these aren't very fixed. So just because something is a technical factor doesn't mean it can't be an on-chain. And just because something is an on-chain factor doesn't mean it can't be a Bitcoin fundamental factor. If you were to look at them, they'd be somewhat like a Venn diagram where there's a lot of overlapping and multiple different metrics and data points can be influencing different factors. And another way to just kind of easily visualize what I'm really looking for when it comes to my investments is if I just add on these stochastics. These are just a visual example. This isn't anything to do with my strategy. But if I kind of view the market in this way, it gives me a clearer example of how I maybe manage my own investments. So this is just the BTC USD chart, and this is just a very long period stochastic. Now, this is kind of representing how I view macroeconomic data, which is very much influenced by liquidity cycles and the general 4 to 8 year transitionary waves we have within traditional macro environments. And as we've seen historically, this is aligned very nicely with Bitcoin. So this is kind of how I view this data. I'm just going to move myself over here so it's a bit clearer. And for Bitcoin fundamentals, this can be a little bit more frequent in changing. This is potentially something like the stock to flow, the Bitcoin ETFs, which can be news events that can happen pretty instantly, really. So this is something that moves a little bit more frequently. And then something like the Bitcoin on-chain data, which definitely moves a little bit faster than both of them. We can have influencing factors in terms of the coin days destroyed or other metrics happening every few weeks or months, whereas the previous two can take months or even years. And on top of that, the Bitcoin technicals, which are happening very frequently, almost every day, every week or so. We can analyze the market and get a slightly different reading on where we could be. And this is definitely the more short-term speculative moves within the market. Of course, it looks very messy and this isn't actually resembling anything, but just to give you a little bit of a visual idea of how I'm looking for confluence between much longer-term metrics and much shorter-term influencing factors. So if we just go back here to the starting chart, this is the global M2 year-on-year versus BTC chart. And this is the basis of a lot of my macroeconomic data. Like we discussed before, the liquidity cycles have a huge influence on the Bitcoin price action. And as we can see by this near perfect correlation between the global M2 money supply or the total circulating supply of fiat or cash equivalents throughout all major global economies, we can see that this is a very much driving factor for the BTC price appreciation or depreciation, depending where we are in the cycle. And I actually like to use the Bitcoin Magazine Pro API that is available with a site subscription. So I can actually transfer all of that raw data down here and actually give myself much clearer indications and signals of when we're maybe seeing a trend change in this data. So we can see all I've done is apply a moving average. And once we get crosses above this average, we can say that we're in conditions that are very much favorable for positive Bitcoin price appreciation. And same for the downside. If we're beneath this, usually we're going to see Bitcoin not too far behind decreasing, probably in a bit of a bear cycle as global fiat supply is actually contracting. We're seeing less and less liquidity entering the markets. So that is macroeconomic data, along with something like the treasury yields, which gives me a good insight into the current sentiment among investors. If we're seeing a huge increase in fiat from the M2 money supply, that's great. But if we're still in a risk-off environment and investors aren't willing to purchase more risk-on, more speculative assets like BTC currently is, then we're maybe not going to be fully reaching the potentials of where Bitcoin's price could skyrocket to if people just don't really fancy buying these assets. So the treasury yields, and I like the 2-year one, gives a good read on how we're currently looking in terms of market conditions. If we just zoom in over the current cycle, we can see as soon as this topped out and started decreasing was when Bitcoin's price started skyrocketing. As soon as we saw this drop here, this marked the exact local low we had in this move before we rallied higher. And again, as this was increasing, we were pretty stagnant until it decreased, and it gave us a lot of fuel for an upside move. So this gives us a good read into investor sentiment across more traditional markets. Then along with that, we're on to the Bitcoin fundamentals. A stock to float being a pretty obvious one. Once we see the inflation rate of BTC decreasing, this is just very bullish for Bitcoin's supply and demand economics. If Bitcoin's becoming less and less liquid and demand is, never mind increasing, even if it's just staying the same, we should see a positive impact on the Bitcoin price action. Now, whether you believe in this model completely or not, either way, I think it's hard to argue that the halving doesn't at least have some bullish influence on the Bitcoin price action. So I'm definitely keeping an eye on metrics like this. And along with this, the ETF data, which we're not going to cover too in depth today, but this would be something else that may impact Bitcoin's fundamentals. Maybe not the daily inflows and outflows, but if we can see a huge amount of institutional interest before an ETF launch, like we saw a few months ago, this definitely had a positive price influence on Bitcoin once they were approved. And if we start to see sovereign states or other large players begin to rapidly accumulate BTC, then of course this is a very bullish fundamental factor, as well as potentially legal environments in certain countries. Obviously, if on-ramps are more and more strict in your country, then that's not going to be great for Bitcoin's price. Yeah, if countries are starting to adopt BTC, then again, that's very positive for Bitcoin. And then here we're kind of in the middle ground where I was showing those Venn diagrams where Bitcoin's fundamentals and on-chain data can definitely overlap, because the 1-year hodl wave kind of gives us a little bit of insight into the illiquidity and the investor behavior of BTC. If this is incredibly high, then the amount of capital inflows required to come into the market to rapidly increase the price decreases, because the amount of liquid supply on the Bitcoin network, on the market, has actually decreased. So this gives us insight into the fundamentals as well as investor on-chain behavior, because as this is decreasing, new market participants are coming into the space, potentially paying a little bit too much for their BTC and rallying prices higher. And once we see this start to increase, it means that hodlers aren't seeing a lot of value in taking profit on their Bitcoin positions. They would rather hold through to the next cycle as this increases. So again, kind of comes under both categories. For definitely more of an on-chain specific data point, I love the MVRV Z-score, which gives us a little bit of an insight into the actual underlying price of BTC or the market cap in comparison to the realized price or the average accumulation cost basis, whatever you'd like to call it, of all BTC on the network. So on this is incredibly high values. It indicates that the average investor maybe is on a 7, 8, 9 times on their average entry price, which is obviously a massive amount of profit. And usually when we see values this high, it does indicate that we're in the tail end of a bull cycle. And same is true for the downside. If we see the average investor at a loss on their positions, definitely not a bad time to be accumulating BTC. And along with that, value days destroyed, derivative from the coin days destroyed metric, gives us some great insights onto when older BTC, especially BTC that has been held by big whales who hold hundreds or even thousands of BTC for years at a time. When we start to see those coins moving, this gives us a little bit of insight into when the more experienced and potentially more profitable traders are actually taking some action on the BTC positions. And it gives very clear red overheated zones like we covered a few months ago at the most recent all-time high. And then again, once we see a lot of these long-term holders refusing to move their BTC, again, holding for the next cycle, this gives us a very good indication on maybe we should be accumulating BTC. Just allows us to maybe follow the whales in their investing a little bit. And then on top of that, something like the Bitcoin Cycle Master, which again is now kind of covering that gray area from on-chain into technicals, because now we have actual price levels on the chart, which we can be watching, such as the fair valuation, the aggressively or overvalued lines we have on the chart here, which have historically called Bitcoin's market peaks, as well as the Bitcoin market bottoms, which has been accurately called by the cycle lowest level here. Now, this is formed using a number of different on-chain data points to actually give us more of a collated valuation for BTC. But again, because we can actually use these as variable levels of support and resistance that Bitcoin has historically very much respected, it's very much also a technical factor as well. Similar to the short-term hold-up realized price, which I love throughout bear cycles and bull cycles both, because we can see when investors, new market participants, are at break even on their entry level, we either see a little bit of capitulation or people just wanting to get out at break even. So usually this acts as almost like a moving average of support through bull cycles and a moving average of resistance through bear cycles. And it can also very easily distinguish if we are in a bull or a bear cycle. If we spend a considerable amount of time above this, it gives us pretty good assurances that if people are making money, new market participants are at a profit on their positions, then we're probably in a little bit of a bull cycle. And especially as this has been respected so well, we usually have a bounce either from above this if we're using it as support in a bull cycle, or we'll bounce from this further down as resistance during a bear cycle. So another great technical level to be watching there. And along with that, we're getting to the much more shorter term metrics. So this is where I'm looking for confluence, not just from something like the Crosby ratio, but if we're seeing this, the incredibly overextended levels to the upside as we're reaching the short-term holder realized price, those two metrics in confluence almost solidify how accurate it's going to be. If we see multiple different metrics from the technicals aligning with multiple different metrics from the on-chain, aligning, etc., you get the point, then we really have a huge increase in the accuracy or the probability of that signal playing out. So this is one I love to watch on the shorter term time frames, especially as well if we just go back to TradingView here and I just hide these. With a Bitcoin Magazine Pro site subscription, you actually get access to the TradingView iterations of a lot of our indicators, and something like the Crosby ratio, I'll even drop down to the 4-hour time frame if I'm looking for some more short-term scaling into my positions, or at the tail end of a bull cycle to start scaling out of my positions, maybe a little bit earlier. So that is another good metric we can be using there, alongside something like the golden ratio multiplier, which has just provided an amazing level of support for BTC after its recent downwards move. And again, a pretty strong level of resistance as we reached our new all-time high. So again, I'm not giving too much weight to just one of these. I'm looking at multiple different metrics to see when we're hitting resistance or overbought areas on 1, 2, 3, 4 different charts at the same time, alongside something like the funding rate. So this is incredibly positive, especially the coin margin funding rates, which is my preference when using the funding rates chart. This gives us a very good indication that people are getting overly aggressive with their longs, and vice versa. If everyone's shorting, it's good to play contrarian when it comes to something like the Bitcoin funding rates. If I just go back to TradingView here as well, something that I like to do is, one of the hardest things when it comes to your Bitcoin investing is deciding when to scale in or scale out. So we've decided how we're doing that once we have multiple levels of confluence throughout all the metrics we've discussed today. But then as well, it's hard to know exactly how much to sell or buy, or exactly when. So I don't like to immediately take profit or scale into positions when I get one of these signals. If we just go back to the most recent high we had in Bitcoin here, so we're on the 4-hour chart at the minute. If we get a sell signal on one of these metrics, Bitcoin's very irrational. There's a good chance we move 5, 10, 15, 20% higher even after we get one of these sell signals, just due to the irrationality of the market. So if we look to back here, for example, once we're in this upper region of the Crosby ratio, maybe set a trailing stop loss. Rather than sell immediately, you can follow price up until we maybe hit a slightly higher price. Again, if we're setting a trailing stop loss here, then rather than taking profit immediately as the signal goes, we're taking profit substantially higher. And again, up here, we can see maybe here would be taking profit pretty close to where the signal was, but you get the general idea. And the same is true for scaling into positions. You don't want to immediately buy BTC just because we've had one of these lower levels reached. What we can do is wait, put a trailing buy level in somewhere like here, so we can see this reach down, and I mean, that was pretty much the exact bottom here. But then somewhere around here, we can maybe get a signal. And then as Bitcoin rebounds is where I'm actually going to enter the market. So this gives us a little bit more percentage, hopefully, as we're trying to scale in and scale out at the exact bottoms and peaks. And then when it comes to the percentage of profit we should be taking, there's a couple metrics I look towards. So one is the global M2 money supply, We can view this as a percentage year-on-year increase. So at the previous bull cycle peak, something like this would be telling us for every one of these signals, we should maybe look to be selling 18, 19, maybe even 20% of our position just based on the year-on-year increase of the M2 money supply. Or something like the MVRVZ score I also like. I'll take this score, and especially for shorter term positions, if this is at something like a 2 or a 3, I usually multiply this MVRVZ score by 3. So if this is it, a value of 3 here and I get a sell signal to potentially take some profit on my position, I'll actually sell 9% of that position. And again, up here at the peak, if it's given a value of 7, I'd maybe go for something like 21% of my position. And then that in confluence of the M2 year on year gives us a good middle ground. We're scaling out gradually of our positions and scaling in gradually. It's going to be almost impossible to ever reliably buy the exact peak or bottom of the BTC cycles. So if we're scaling with a huge amount of our capital as we're getting to the lower end of these values, then this gives us a much higher chance of accumulating very close to the bottom. And same is true for the upside. If we're scaling out with increased size as Bitcoin's price moves up, at some point price is going to top out and we are going to be selling the exact cycle peak. Now, obviously we've covered quite a lot of charts here today, and I do give a little bit more weight to some than others. But as I said, I don't want to give exact specifics because you might not be someone that wants to trade too frequently. Maybe you only buy or sell BTC once every few weeks or years, which is great. Sometimes I'll have months where I don't take any action, but this is where something like the Bitcoin Magazine Pro alerts really helps because I don't have to be monitoring the charts all day every day. Really, my analysis takes a few minutes a week and then I'm pretty much set. So I just rely on a lot of these alerts. Really comes through via email, and then from there I can take action on my Bitcoin positions. And also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on bitcoinmagazinepro.com, your number one source for Bitcoin analysis. So just to summarize, the best strategy for Bitcoin investing is to consider a handful of metrics that can inform you of current market conditions from several different perspectives, all providing confluence. Like we could see with the Bitcoin trajectory catalysts, looking at macroeconomic data, BTC fundamentals, on-chain data, and technicals. Once they're all aligning and giving very similar indications of a Bitcoin buy signal or a sell signal, that's usually a good indication to maybe pay attention. And especially because we're paying attention from multiple different perspectives, like it says here, we can see that if the macroeconomic conditions for most trade markets are in a very poor state, really that's going to suppress Bitcoin's upside potential. Even if the technicals look great and the on-chain data is very much in our favor, we really need to consider every aspect when doing our investing. And one of the hardest skills in investing is patience and having the ability to make unbiased decisions. That's why I think having a data-driven approach that doesn't rely too much on personal gut instinct, even though that can be very good, very accurate. Sometimes I'll have a little bit of an opinion and that can maybe sway my decisions, but in general 95% completely data driven. That approach has historically performed very well, and sticking very strictly to this will outperform a vast majority of investors who are just acting on emotions, the content they see on social media, and don't really have a plan of action. They may just be hoping to become rich but not actually have the steps of how you're getting there. So that's why I think having a very set approach, maybe just write it all down in a notepad or save it as your wallpaper, so every time you see it, you know I need to stick to my very rigid set of investing rules. But do keep in mind, however, that this is a personal endeavor. Everything I've discussed today works for me and my approach. But like we said, if you're someone that maybe trades a bit more actively or invests very infrequently, then you'll need to modify this process to suit you and your investing. Maybe you get rid of technicals altogether, or maybe you're just purely focusing on BTC and are much more of a short-term trader, in which point maybe you can ignore a little bit more of the macroeconomic data. Just change those percentages so they work in your favor. If you liked this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on your Bitcoin investing strategy. Do you have a radically different approach to me? Do you completely disagree with the way I do things? What would you change? Is there anything else that you maybe look at that we haven't covered today that you think massively improves your potential for profitability? Whatever it is, as I said, let me know down in the comments below and on social media. I look forward to reading and replying to all of the good ones anyway. Thank you all very much for watching, and I'll see you in the next one.